Porinju Veliyath joins us, Managing Director and Portfolio Manager with Equity Intelligence India. Porinju, good morning. Thank you for joining us. How are you approaching this market? Because all kind of parallels are being drawn between September 2008 and September 2018. The news flow may not be that bad, but for mid and small cap investors, the pain has been excruciating. So how are you dealing with this fall?
See, as an investor, I have nothing to do at this point of time. Investors have to only wait and watch. This is a very it's a typical market panic, and we have gone through such many corrections and cycles. And every cycle, every correction is unique in this market. That's what I believe. People try to compare with the 2008 or 2000 soft IT bubble or the 1992. But these things doesn't matter, and every cycle is a learning point. When the markets are bullish and things are going well, especially in the recently 5 years of bull market, especially for the small and mid caps, everybody got carried away. Even I also got carried away. So this is very quite naturally happening things. But one thing investors should not forget: such kind of scary, fearful situations, sharp corrections and crashes has happened many times in the past, and every time markets have bounced back. So it is not end of the world, as many people can maybe thinking at this point of time. No, this is not something first time happening, but there are some certain aspects of this fall, this crash is first time, in the sense that our Nifty, for example, is still at near the peak, I would say. And we had gone to something like price earning multiples of 28, 29 for the Nifty. It is still around 26 or maybe 25. It is still expensive. And at that same time, 90% of the stocks, listed companies, even investment worth companies, they have gone 30, 40, 50, and some of them 60 and 70%. So this is very unique, and it's very painful for investors in any case. And especially in the short term pain is also pain. And trading community, maybe 1 or 2% of people might have survived this, and some of them might have even made money. But investors at large is at pain. One has to admit that. But I believe this is a short-term pain for genuine long-term investors.
Okay. My question to you again, Porinju, is that how should one really minimize the losses, do maximum capital protection? I'm with you when you say that markets they go through a painful cycle of boom and bust. Last 2-3 years have spoiled us because returns have been extraordinary, and this mean reversion is coming at a painful cost. But when you suddenly see portfolios which are down 15, 20, 25%, what should one do? Because nobody likes to lose money, and the experience of losing money makes you anxious, nervous. You may end up doing stupid decisions which you should not be doing right now.
See, equity investors have already lost money. Now the only thing what they can do is make more money by selling it, lose more money by selling it today. So inaction is the only thing if you are in the right stock, but right stock is again is not an easy thing. Nikunj, if you remember, I was talking about improvement in the corporate governance. And some of the chore companies with very good business model, potentially high quality business model, when the corporate governance improve, there could be multi-baggers. I have gone very badly wrong in timing that, because I was very optimistic with the structural changes happening in the economy, where the black money and siphoning of money has been discouraged. Many of the smaller companies, family-owned and traditionally managed companies, they will have encouragement to go more professional about it, and take care of the minority shareholders. So that expectation has been belied. So I'm paying a price for that at this point of time. But I haven't lost all the hope on that. I still believe there is improvement in the corporate governance happening, or it will definitely happen. The way things are moving in this country. And we are now, in fact, going through the pain of that reforms, going through the pain of that cleaning up happening in this country. So I still definitely appreciate the recent reforms by the government, to clean up the system. We have been extremely unsustainable way. We have been corrupt. Our systems have been corrupt, and the criminals and the bad guys have been making all the wealth. So that system has to change politically, bureaucracy, whichever, all over the complete social setup has to be cleaned up. That cleaning up is happening, and I, in fact, underestimated the short-term pain of that reforms. So many companies are paying a big price for that. So there can be even permanent loss of capital in some of the listed companies.
Porinju, morning. You rightly said it. It's really the fear psychosis which seems to be gripping the market right now and investors at large. So tell us, what is your strategy right now in your PMS? Are you buying this decline into individual stocks, or are you in pure capital protection mode right now?
I'm in total inaction at this point of time, to make it very frank. See, I don't have money to invest. Of course, some fresh money is coming in. People, especially my old investors, who have been my investors with us 8 years ago, 10 years ago, 15 years ago, they have seen such a few cycles, and they have been adding funds, additional capital, and many new investors are also opening accounts. And that money, of course, we are fully investing in a day or two of the money coming in. And so that is, otherwise we are not, I was not sitting on cash. So we have been fully invested otherwise. So this new money coming in, I'm very confident. I'm very happily buying stocks. Even today we have clients, and we will be buying mostly today itself. And maybe little money kept for, for some of the stocks to where we expect it can go down further. And, this market is too dynamic. There is, now it's very easy to say, people are using today the word, capital protection. I think it's the wrong time to use that word. If somebody had that vision 8 months ago or 1 year ago, all these things, all these sophisticated jargons would have been more relevant. But again, see, nobody's that smart in this market. Market makes everybody, look fools at some point of time. See, people who have been talking about capital protection and, the price earning multiple, all those things, some of them were bearish in the market 3 years ago and 4 years ago. And they have missed out on the rally. But those people are doing well today. Their conservatism, their capital protection kind of style, everything is working in the last 8 months. So that's why I'm telling you, every strategy has a time, and market has these cycles. And even individual companies are going through cycles.
Right.
So,
right. Porinju, so what is it that you do? I mean, are you buying more of the same for that new money that is coming in from your old investors, or are there fresher names that are beginning to look attractive in this decline?
We are buying. Whatever money coming in, we are buying it. Even today, we will be buying it fully. Because I find very attractive valuations, especially in the so-called beaten down small and mid caps, but very selectively. As I told, many companies, there can be total loss of capital. That is the way the economy is moving. The world is moving. You cannot even, there is no point in blaming Indian economy or Indian, legislators for that. The world is moving in some very special way. There's disruptions happening, and plus the fraud companies. The fraudulent companies all are being exposed only because of the structural changes happening in the Indian economy, the transparency, the efforts by the government to clean up the system. These fraud companies are coming up, and some of them will be bursting. There can be capital loss, total capital loss. I used to talk about chore companies, and I would like to clarify, there is a difference between the kind of chore companies I used to talk about. The chore companies had a strong balance sheet perhaps, and they had a very relevant futuristic business model, very profitable in the future and even today. So, but some of them were siphoning off money. But when that is discouraged, when there is no incentive to remain chore, some of those companies, because of that improvement in the corporate governance, can create multi-baggers for the investors. That was my argument. See, but in India, unfortunately, we have a lot of fraud companies. That is very different. I have never touched that, or knowingly at least. So these fraud companies, India has been, we have very large number, not one or two. Some of the large names are now being exposed, and they are under stress. Investors are losing money. But this is unprecedented. And this unprecedented, things happening in the market is only because of the structural reforms being pursued. And these structural reforms are very important. And this is a short-term pain. So investors will have a very tough time. And knowingly or unknowingly buying into or happening to hold the fraudulent companies, there are a lot of them. That's a social problem, in fact. The values have been declining in the country, in the society, in the last many decades. So that is reflecting in the corporate governance, in the way managements are managing the companies, the listed companies, publicly owned companies in this country. So we have to live with that.
We indeed have to. So does it boil down to going back to square one and looking at the defensive classic consumer names? You have the trigger of the festive season also coming up. Find your safety net within that space?
Yeah, safety net is something I don't know. Today, see the index at 25 and 26 PE. I'm talking about Nifty. It's not attractive. There should be further corrections. See, I'm telling you, most of the investors, I will tell you 75-80% of the investors in India, they are Nifty. If you take the last 8 months from that peak of Nifty, they have go down to at least 8,000 on an average for investors. So for investors in India, in general, the Nifty is at 8,000 today. At 8,000, Nifty will be very attractive. So, few companies, I don't know whether somebody is manipulating the Nifty or managing the Nifty, but Nifty at 25-26 P is still overpriced in the given economic environment.
Okay. Porinju, will you buy Yes Bank right now? The smile tells me you bought it or you are... I can't judge your smile.
It looks very attractive going by the standards. But I don't know whether there can be skeletons coming. I don't know. So I'm scared, to be very frank, because I also experienced few such instances in my portfolio. So whether this is but my gut feeling is that if there is no big fraud or an accounting of Yes Bank, this will go back to maybe 300 or more in the next 1 year time. There is a potential. I'm not holding any shares.
Give me, if not one, I mean, in this kind of a market, you should be having 5, 10, 15 ideas where you think the selling is done because of compulsive factors. Technicals, leverage, HNI redemption, where the economic reality is not that bad and there is a disruption in the price, but there is no disruption in the business or earnings.
Okay. I was looking at a couple of companies, from a perspective of assets. Because equity, again, investors are forgetting one fact. When things are bad, they tend to forget. Equity is, again, a hedge against the currency depreciation and high inflation. I hope you agree with me. But these are talked only good times, at good times. Now, I was looking at some companies like, asset-rich companies, operational assets, like Phoenix Mills, what they own, and a company like perhaps Oberoi Realties. I'm just telling an example coming to my mind. My theme is I'm talking asset-rich companies with healthy balance sheets, and these assets should be operational assets, generating returns. So in this fall, if these companies are coming down, they have already come down perhaps. So there may be a dozen or 2 dozen companies very strong in the large mid-caps in India, listed companies, investors can look at. I'm just telling 2 examples which is coming to my mind. Phoenix Mills and the Oberoi Realties. Solid operational assets for the future in India's economic environment. Look at some of such companies when there is a sell-off or a panic, in these days, buy into some, that can be a theme for investing 10-15% of your portfolio money.
Porinju, you've got some viewer queries as well coming in, and they've got many questions for you. So I'm going to take in V. Ramnarayan's question. He wants to know, what is it that you do with water treatment companies like VA Tech Vabag? And I know, Porinju, that, earlier you've liked this story as well of VA Tech Vabag. Do you buy it in the current market decline?
I have been buying VA Tech Vabag from 550 rupees. We started buying. Today the price is well below 300. I think it's some 1,500 crores kind of market cap. It's a very large water solution company in the world, not only in India, and very professionally managed in my knowledge. Balance sheet used to be very strong till 2 years ago. Because of certain accidents, one time, the temporary phenomena, their working capital requirement had gone up. Still the balance sheet is not bad, There is no huge debt or kind of things. So we are very, very bullish. We continue to hold the stocks. We are not doing, but we are buying for the new clients. It looks good. We have a significant stake. But I don't think people should really, if you are not comfortable about the fundamentals of the company, there are a lot of choices today. But I like Viatech Vobak because you're asking me. It is because the sentiment, this is mostly institutional held company. Many of them have been selling because the stock price is low. It's a paradox, when many funds have got a policy to sell below a price, not above a price. So that way, that kind of selling by multiple institutions have made this kind of pricing, even going by the price earning multiples or other parameters or fundamentals. And I'm very bullish on the business for the future. It's a futuristic segment when we talk about, seawater desalination or drinking water or even the wastewater treatment, which India is lacking in a big way. We have a huge demand for that going to be generated. So I feel this is a futuristic business run by professionals with a reasonable good balance sheet, and then it's all up to you. Do your homework. I think it's looking good to me.
It's looking good to you. Always a delight speaking with you, Porinju. Thanks very much for taking out the time and discussing with us your ideas in this market.
Thank you.